Hi, I'm Tina, the founder of Accounting Pros, and I'm here today to give you some more PPP updates. And so, these updates are going to be as of today, June 1st, 2020. If you see this video after June 1st, 2020, the information might be different, so please check into our YouTube channel and also our blog and make sure that you have the most up-to-date information to rely upon. The Department of Treasury also has a lot of information on their website, so if you go to Department of Treasury, there's a big red banner across the top of their screen, and you can click in there. You should find some PPP information there. Everything's dated, so just make sure you're looking at the most current information on there by date. But yeah, it is changing like crazy with the PPP. So thanks for watching, and I hope you're able to find this information useful. All right, so if you know me, which maybe you do, you might know that I am a meditator and I studied Buddhism for a long time. And in Buddhism, we talk about three kinds of suffering. Suffering, which is birth, old age, and death. The suffering of change, so nothing is ever static, even the good stuff. And all pervasive suffering, which is just like the suffering that coats everything else. Not saying that life is bad, but those are the three ways they describe suffering. And in the PPP program, I have discovered a brand new kind of suffering, a suffering of the PPP. The reason that I call it the suffering of the PPP is because I feel like every other day information is changing. It's really hard to rely on videos or blogs or really anything. And I've had a lot of people feel really frustrated, which I have felt too. And so this is a brand new kind of suffering that should be written into the old texts as a new kind of suffering moving forward. But anyway, I digress. All right, so let's talk a little bit about changes to what can and can't be forgiven with the PPP. So the payroll costs are relatively the same. You've got your salaries, tips, commissions, or similar compensation still capped at $15,385. They did note in the PPP documentation that Backpay, bonuses, and hazard pay are included in allowable costs. And I think this is an important thing to mention because a lot of people have let their employees go and they've got to bring them back whenever businesses starts again. So I'll read you, the little excerpt from the documentation, but if you furloughed people and you're bringing them back and you need to pay back pay, this is totally allowed under the PPP program. And then the same things apply as well for vacation, parental, family, medical, or sick leave. That's still allowed. You can still pay for separation or dismissal, so if you give somebody severance. Employee-sponsored benefit programs are still included. This is health insurance and retirement. And employer-paid state and local taxes as well. Also, employer-paid state and local taxes are allowed. This is things like state unemployment insurance. It's not going to include Medicare, Social Security, things like that. As your accountant, we would calculate that for you. Just make sure that if you're calculating it yourself, you're backing that out from your payroll reports. And the big question is, what if you pay people that aren't working, which I mentioned before? So the SBA and Department of Treasury has written some documentation here, which essentially says that if your employees are not able to perform their day-to-day duties, whether due to lack of economic demand or public health considerations, that you can pay them through the PPP. Some people that were affected, industries would be restaurants and retail, fitness, gyms, things like that are all going to be people who were affected by mandated shutdowns or closures. So if you wanted to keep your employees paid, which was the whole point of the program, but they didn't actually do any work, it's just fine by the SBA and the Department of Treasury. So keep on keeping on. And they did also clarify the covered start date, which you can actually have a bit of flexibility here. So in their documentation, they say that payroll must be paid or incurred during the 8-week covered period or alternative period. And the covered period is going to be the same as before. So when the funds are dispersed, you have 8 weeks or 56 days until the end of your covered period. But if you have, if you're somebody who has biweekly payroll or you pay more often and things aren't quite aligning, with the PPP, you can actually choose the start date or the alternative period date to start on the first day of the payroll cycle in the covered period. So, and this is called alternative covered period. So I'll give you an example, and this is exactly what the SBA has provided. So in the SBA's example, they're saying that this borrower received their disbursement on 4/20/2020. So that's why I've got a big green box here on the screen. but their pay period doesn't actually start until 4/26/2020. So rather than, having essentially 4 lost days where you're not covered, they're saying go ahead and wait until the beginning of your next pay period, and you're going to start on 4/26 and you're going to move forward from that point. So if you don't know your pay period dates, your accountant can tell you, your payroll software should be able to provide this information. But this is really helpful for people who, there was a significant gap between the date that you received the money and then when you actually paid people and the next pay cycle begins. So don't worry about that. If you're our client, we'll calculate that for you. Otherwise, just have your accountant, or you can go ahead and look at your payroll software to find out your pay dates and your pay periods. In addition to this, the Department of Treasury and the SBA has noted that in addition, payroll costs incurred during the alternative payroll covered period are eligible for forgiveness as long as they're paid on or before the first regular pay date. So if you have your period ending and it includes this alternative period, and let's say that the period ends here on 5/9 and you're going to pay them, just for the sake of ease, on 5/10, that's still allowed. You don't actually have to pay it during the covered period, but as long as you get it paid before, on or before the next date it's due, you're not paying it late, for example, then everything is kosher. And the Department of Treasury and the SBA has gone even further to clarify what it means for things to be paid or incurred. So payroll costs are considered to be paid on the date that paychecks are distributed or the borrower originates an ACH credit transaction. That's pretty simple. It's incurred on the day that the pay is earned. So if you have, mid-cycle payrolls happening, like, your next pay date is going to fall outside of the covered period, we're just going to take the payroll that's incurred before the covered period ends, as long as everything's paid on time. So if there's a couple days like interim where payroll is going to be included on the next cycle, but it doesn't fall within that period, we're just going to knock those days off. So you might have a slightly prorated amount, but you're still able to include the days that are within the period, if that makes sense. And payroll costs that are not allowed, this is all going to be the same. So payments to employees who live outside of the United States are not going to be allowed. Any compensation over $100,000 per year limit, so we can get up to the $100,000, but we can't forgive over the $100,000. And they've calculated this by taking $100,000 a year, you divide it by 52 weeks in a year, and then you multiply that by 8, and that comes out to the $15,385 for the covered period. Other payroll costs that are not allowed, same as before, federal payroll taxes paid by the employer, so Social Security, Medicare, FUTA, things like that. Qualified sick and family leave wages for which a credit is allowed under the HR 6201 Act. Payments to independent contractors, still not allowed, and member draws and shareholder distributions are not going to be allowed. And the SBA, Department of Treasury, has also provided some language on employee owner compensation. And so this means that if you are an S-Corp officer, for example, or you're an LLC member, you can't exceed the prior year's compensation. And they're going to still max this out at $100,000 a year or $15,385. So I'll show you an example of how this is calculated using an S-Corp officer's wages. So this is all going to be W-2 for 2019. So let's look at that. So this S-Corp officer makes $50,000 a year. So we're going to divide that by 52 weeks in the year. So their weekly pay is $961.34. And we're going to take $961.34, we're going to multiply that by 8. There's 8 weeks in the covered period. So that means that this person cannot get paid more than $7,692.32. So if this is you, you've paid yourself $50,000 this year, and then you get a big PPP and you gave yourself a raise to 60, 70, 80, even 100,000. We're only going to be able to get the amount forgiven that's going to, equal whatever your 2019 wages were if you were paid lower. So don't try to give yourself a fat bonus. I know that's really enticing, but if you do, you won't get that amount forgiven. And the same thing goes for net income for an LLC, like a single member LLC. If you are looking at your 2019 taxes, which is what you should have used to qualify for the program, you're going to take your net income and do the same, divide it by 52, multiply it by 8, and that's going to be your total. If you're an S-Corp officer and you didn't pay yourself last year, You're not going to be able to include yourself this year. If you had a negative net income, you probably didn't get a PPP loan anyway, or if you had a really low net income, it's going to have to be at that rate. But they're really trying to keep people from abusing the program, which if you've seen any of my other videos, you know how strong of feelings I have about abusing the program. So I feel like they should have told you, at the very beginning of this process that you were supposed to be limiting your pay. It seems kind of crazy to say things now, especially since there were a lot of people, not small business owners who are abusing the program, but bigger business owners. I feel like they should cut you a break, but I don't write the rules. I only am here to interpret them and share them with you. And the 75% rule still applies. You must have your payroll cost at 75% or more of your total loan amount. So if you're, let's say that you have a $100,000 loan, then the payroll costs, which are going to be all the things I mentioned before, need to be $75,000 or more. If they're less than that, then you could potentially lose some on the forgiveness side. So just make sure that you're weighting the payroll costs at a higher rate and you're within the current guidelines. And there are some other adjustments to the other costs or non-payroll costs. In the original documentation, the SBA and the Department of Treasury allowed interest payments on business mortgage obligations. They've actually extended that to include interest payments for any personal property loans that you have out. So if you bought equipment or if you bought anything that you're using that you finance for the business, that's not real property. Real property is going to be real estate. Personal property is going to be like, office equipment, things like that. You can include the interest on those items. It doesn't say anything about other like notes or anything. So if you took another SBA 7A loan or another kind of loan, probably not going to be able to write the interest off. And I don't think they're going to be changing that here. So focus only on, gathering your documentation for any loan agreements for personal property in addition to the real property. They've also added that you can include lease payments on personal property as well. And this is going to be things like, copy machines. We use a company called Rippling in order to lease our equipment. So we're going to be writing that off. I have a lot of people who are in fitness, and so they've got treadmills and, weights and things like that. If you're paying a lease on that property, yes, please include that, but just make sure that you have everything to back it up. And then the same things also apply for utilities. We're still going to get electricity, gas, water, transportation, telephone, internet. I've had a lot of questions about transportation. There's not a lot of clarification on this, but my thoughts are going to be, things like bus passes, toll passes, things like that are paid for by the company. I don't think that they're going to be able to include, vehicle payment as a utility, but a vehicle is considered personal property. So if you're leasing it, we can potentially include the lease payment on it. If you purchased it, we can include the interest on that note as well. But just make sure that has been on the books historically, that we're not just buying a car. Everything needs to be in place by, earlier this year, February 15th, 2020. So if you're going to go out and buy a car in order to write the lease payment or the interest expense off, you're not going to be able to do it. But no, if you already had a company vehicle, we should be able to include that in your forgiveness moving forward. And they also went on to clarify the difference between paid and incurred expenses. So a non-payroll cost is eligible forgiveness if it was 1, paid during the covered period. This is totally normal. This is what it was written last time. The second part is if it was incurred during the covered period and paid on or before the next regular billing date, even if the billing date is after the covered period. So that's a new thing, a new addition on here, which I think is really helpful. So I'll go through an example that the SBA provided. Okay, in their own documentation, so this is straight from the source, they're saying, let's pretend that your covered period starts on June 1st, and the end of your covered period is July 26th, that's 56 days. If you paid your May and June electricity during the covered period, so let's say that you paid May and June together in the beginning of June, and then you paid your July electricity, which is in the covered period, but you paid it outside of the covered period, so August 1st, you can still include that. So it's outside the covered period, but it's still incurred. So we're going to include the electricity all the way to July 26th. We're not going to take, the 27th on because that's not in the covered period, but you did pay it on time and you did incur it. So yes, we are going to be making sure that we have all the documentation for everything here. So electricity bills, any lease agreements, all this kind of stuff we're going to have on hand. And we want to make sure that we're getting the maximum forgiveness so that you don't have to pay that back. And they did also clarify about prepaying or making advance payments on mortgage interest. So no, you're not able to write off prepays for your mortgage interest. Keep paying your mortgage as planned. Don't try to add on additional costs here or additional forgivable expenses here because they will definitely tell you no on this. It is written in, not stone because everything seems to be changing, but it's written in the current guidelines right now this way. And this also is under the same 25% rule. So the way that the guidance currently reads is that you must spend 25% or less on your non-payroll expenses. So again, using the $100,000 example, you have $100,000 to spend, $75,000 or more needs to be paid into payroll, $25,000 or less is going to go for other costs. This is all written, this is all documented in order to do exactly what this says. We're trying to keep American workers paid and employed. That's the name of the act. Use the funds for which they're intended for. Don't try to get around the rules. There's probably going to be some changes that are coming in your favor, which I'll talk about in a second. But the fees or the fines and the penalties for lying or padding your expenses can be pretty crazy. I mean, you could go to jail. I wouldn't want to go to jail. So just make sure that you're honest in this and that you're using the funds exactly as they're supposed to be. All right, so this is cool. It's not totally written into law yet, so just know that. But the PPP Flexibility Act should be giving you some more flexibility on how you spend the money and when you spend the money. I have some thoughts about that as well, but there are some potentially good news. There's some potentially good news coming down the pipeline. So the way that the current PPP language is written is the covered period is 8 weeks. The PPP Flexibility Act is saying, hey, I'm not going to be able to spend the money in 8 weeks. My employees are out, or I'm shut down. I need more time. So this is currently in the Senate being looked over. It's already passed the House, but they're saying let's give you 24 weeks to have that covered period. I'm hearing that it's probably going to be less, so 12 weeks is probably likely, but we'll see. So again, this is not totally written in stone yet. This is something that they're still debating about. They're also debating about the non-payroll expenses. So currently you must spend 25% or less on your non-payroll expenses. Now they're trying to up it to 40% or less because some businesses have a really high cost of other expenses. Their rent's going to be really high if they're a restaurant in a really in-demand area. Or if you're in a retail space that's in an in-demand area, you're going to have a higher rent for that too. So again, this is still kind of, supposed to happen, but we don't know if it's actually going to happen. So take that with a grain of salt. They're also potentially extending the program. Right now, the program's supposed to end on June 30th. They might end it on December 31st of this year. We'll see. The current term for the note is 2 years. They're saying it could potentially be 5 years. This is something I don't actually know how this is going to work because I've already signed my PPP loan documentation that says that the term is 2 years. Does that mean I have to re-sign my note? I have no idea. Are they going to extend the terms to everybody? I have no idea. My goal is to have nothing left over in the note. I don't want to pay on this. So if that's the case, it doesn't really matter to me. But if for some reason I get stuck holding the bag, I would like to have extended terms, and I'm sure you guys would too. So I'll keep you posted. Currently, no payroll taxes can be deferred. They're also looking at allowing businesses who take advantage of the PPP to also defer their payroll taxes. So I hope that happens, but we'll see. And there are a lot of people who are backing this. The National Restaurant Association, the Travel Association, the Hotel and Lodging Association. Do you see kind of a pattern here? These are all people who are really affected by coronavirus. Restaurants had to close. Hotels, had to close. All kinds of stuff. Traveling just completely halted. So of course they're going to want to have better terms because it serves the people who are in these associations. So it's good to see that these people are stepping up and trying to make change because this is really, the PPP works really well for some businesses, but it wasn't a perfect fit for every business. And it was a little bit frustrating to have to spend the money in 8 weeks when you knew that you probably weren't going to open your doors for 12 or 16 weeks or some crazy number, really depends on where you're located. So fingers crossed. But if you are familiar with Schoolhouse Rock, so I'm just a Bill, you know that how things kind of go through the process. So everything begins with an idea, then it goes to the House, then it goes to the Senate, then it goes to the President. It's already passed the House, the Senate's considering it, probably going to do some rewrites. When that's done, then it goes to the President. So the way that it's currently written is exactly as I presented it, but is it going to change? Yeah, probably. But hopefully it'll become, written into law, and Mr. Bill over here, I'm just a bill, will actually become a law. And my strong feelings on this are the Department of Treasury and the SBA should have issued guidance on this weeks ago. I have clients who got their funding the day that the SBA was releasing money. We were on top of it. We got people approved. I think in total, we probably funded about $10 million in PPP loans. And, both the first and second round, but everything really like 95% was all in the first round. So that time is already gone, and that money is already spent because the Department of Treasury said you either use it or you pay it back or you give it back. And so we were really operating under the idea that we were going to use these guidelines. So I have restaurant clients, I have fitness clients who are really upset, or they're pissed off. I am too, because the money is gone. So maybe we can get additional funds, an additional round. I don't actually know if that's possible, but I wish they would have told us in the beginning, because we would have held on to that money until it was actually, realistic to spend it. So I won't go off on too much of a rant, but that really it drove me crazy. So the forgiveness reduction, we'll talk a little bit about that as well, because you need to really be aware of what are the pitfalls in the PPP program, and how could you end up having to pay more back or pay more than you expected to pay back. So full-time equivalent, we talked about this in previous videos. So a full-time equivalent is really based on a 40-hour work week. And so we're going to be looking at the average number of full-time equivalents during your covered period, and we're going to look at 2 periods in the past. So we're going to compare that against how many equivalents you had from February 15th, 2019 to June 30th, 2019. And we're also going to compare that against this year, so January 2020 to February 2020. And our goal is really to understand, how many people are you paying currently or in your covered period versus what you've done in the past. So this example says that, currently we're employing 18 full-time equivalents, and previously we've had 20 full-time equivalents. That means that we've had a 10% reduction in our workforce, which means that we will only get forgiveness on 90% of our loan. So what we're doing for our clients is we have a giant spreadsheet where we're tracking all this information from previous periods versus a covered period. We're making sure that their head counts are up so that they're not penalized by the SBA. And they know about this way ahead of time. They're not last minute looking at their numbers trying to figure these things out. We already know the answer to this question. I'll be sharing our forgiveness calculator. It's a big spreadsheet in another video. I didn't want to make this video too crazy long, but I'll walk you through step by step the exact things that you need to do to figure out these numbers. So I will put a link to that video in the comments, but just know that we've already sorted it out. We use the latest guidance from the SBA's forgiveness application, and so we know it's totally spot on. All right, and they did also clarify, so what we've been saying in the past is full-time equivalence means somebody who works 40 hours a week or more. You can have somebody who is a portion of an equivalent, but you can't have somebody who is more than one full-time equivalent. So if you have one person who works 20 hours a week, normal work week again is 40 hours, or normal full-time work week is 40 hours, a 20-hour a week person is going to be half of a full-time equivalent. Somebody who works 40 hours is going to be 1. Our spreadsheet calculates that all for you. There's just been a lot of questions about that, and it was really clear in some other guidance, but they brought that over into this guidance so that it completely mirrors they had the National Accountability Office or something that had this documentation. They just kind of merged it into these documents. And they also gave you the ability to elect to use a full-time equivalent of 0.5 for each part-time employee. So if you have somebody that works 30 hours a week, you can say that they're 0.5. I feel like that's not as advantageous for my clients. If I have somebody who's working 39 hours a week, they're very close to a full-time equivalent. If I drop them down to 0.5, I feel like it's just going to be a headache, and it could make them have, a smaller FTE number in both periods. So we're actually just looking at what are the total number of available hours in each of the periods. So option 1 and option 2. And those options again are going to be February 15th, 2019 to June 30th, 2019. We're looking at the hours from January 2020 to February 2020, again, comparing it against the covered period. And I want to be very detailed with this, even though it takes a bit more time, because if that means that my clients do not have to pay back the PPP, it's worth all the time in the world. So feel free to use their 0.5 equivalent. If you're our client, know that we have a different method, which will be included on our spreadsheet, again, linking in the chat. The SBA is still using the same guidelines for the FTE reduction safe harbor date. So if you eliminate any of your reductions in full-time employees by June 30th, you're exempt from any reduction in the loan forgiveness amount. So as long as you get your FTEs up to the same amount or very close to the same amount from those 2 optional periods, then you're golden. At the same time, if you haven't been paying them during your covered period, you're going to have to return that money anyway. So, because you're not going to be spending it, it's not going to actually be included on their payroll likely, unless you paid them furlough pay or back pay. So my thought is get them on the payroll now if you can, because we still don't have additional time. We still don't have the 24 or 12 week, extension or whatever. It's still 8 weeks. And if you want to use the money rather than, returning it, get them on payroll now, get your FTE count up, and you don't have to worry about, figuring out this stuff later. And here the SBA is telling us that when an employee of the borrower is fired for cause, resigns, or requests a reduced schedule, you can exempt that employee from the calculation of the FTE reduction penalty. So if you have somebody that falls under this, you've let them go because you've gotten tons of warnings, you put them on a performance improvement plan, they didn't improve, or they resign, they go work for somebody else, or they decide to stay home forever, whatever their choice is, you should get that documented. Make sure that you have, if they have resigned, did you get a letter of resignation? Did they put it in writing that they wanted a reduced schedule, which would reduce their FTE? Or if you fired them, do you have a copy of that performance improvement plan or any communication around that sort of discipline? Make sure that you've got that on hand, because you don't want to be dinged if you let them go for actual cause. So there is something written in here for you. And if you offer to rehire somebody and they say no, you don't have to include them on the calculation either. Again, so if you say furloughs are over, we want to bring you back, and they're like, I don't want to come back, I took a job somewhere else, or I moved, you don't have to worry about it because we can exempt them. And the SBA has actually given us 5 things that we need to do here. So number 1, the borrower made a good faith written offer to rehire. The offer was for the same salary or wages and the same number of hours. So if you give somebody a bunk offer, like, I want to bring you back, but it's going to be at half your wage or half the number of hours, of course they're going to say no. I mean, that's just a dead giveaway for you not actually giving them the same offer or the same, bringing them into the same role. It needs to be the same from before. They need to reject the offer. You need to have that documentation on hand. And you also need to inform the state unemployment insurance office that the employee rejected the offer within 30 days of the offer rejection. I'm assuming that this will affect their unemployment insurance. I think the whole point of the program is to get people back to work and paid. And if they are declining your offer because they want to stay on unemployment, that goes against the whole program. Even the unemployment insurance program, this is like a program that was put in place as a measure to help people stay afloat, when they didn't have the opportunity for work. You've clearly given them the opportunity for work and they're still rejecting it. This will likely affect their benefits. So it's in their best interest to come back either to you or to go somewhere else for work. And I don't want this to be, retaliatory or harsh or mean, but this is what you need to do to get forgiveness. So it might feel bad to go and narc essentially on this employee, but if you want to get forgiveness or you don't want they're saying no to hurt you, then you do need to do this last step. So sorry, but it has to be done. And the SBA has also said that you're not going to be double penalized. So you're either going to get the FTE reduction or the salary reduction. So you can't actually, if you gave somebody less hours and it reduced their total FTE, if it also, because of the less hours, reduced their wage, then you're not going to get dinged on the salary reduction as well. So to ensure that the borrowers are not double penalized, a salary and wage reduction applies only to the portion of the decline in employee salary and wages that is not attributable to the FTE reduction. So if you gave them less hours, fine. If you also cut their rate of pay, that cut in the rate of pay, anything over 25%, will be included on that salary or hourly reduction. But if you just reduce their overall hours, which resulted in less pay for them, then you'll be fine. So just make sure that you keep that in mind. And finally, there's been a lot of questions around, how the PPP in the EIDL and other programs are going to affect your business tax return. So this is, again, something that's not been written into law. This is just at the idea stage. But the Small Business Expense Protection Act of 2020 says that we need to clarify that the receipt of coronavirus assistance does not affect the tax treatment of ordinary business expenses. So currently, the way that it's written, it says, this money is going to offset your net income. So you're not going to be able to write off these expenses that you have taken the benefit of from government funds. What they're trying to say is, yeah, you took the government money, but you should still be able to take the expenses on your tax return. And going back to I'm just a bill, this is not even in the House, Senate, or sitting in front of the president. This is just a good idea that hasn't been actually, it hasn't gone through the whole process. So fingers crossed that it actually happens, because I would like to benefit from this, and I'm sure all of you guys would as well. But this is a little further on down the road than the PPP Flexibility Act, which is already in the House. It passed the House and is in the Senate. Like, that's already light years beyond this. This might get kicked out. We don't know yet. So just keep that in mind. Take it with a grain of salt, but fingers crossed that it actually happens. So those are the biggest and most important things that you need to be considering with the PPP. Please let me know if you have any questions in the comments down below. I'll be sure to include the PPP forgiveness calculator with the link to the YouTube video that explains how everything fits together. It's important that not only you have a spreadsheet to document everything, but you understand the math behind it. Because when your loan officer asks, how did you come up with this number? If you tell them, well, I just put it into some random spreadsheet, they're probably going to say no or think you're crazy. So it's important that you get kind of the logic behind it, and I'll walk you through the application versus what we have. But that should make you feel better about the numbers that you're using and feel more confident that the numbers you're giving are correct. So again, like and subscribe, all that kind of junk. Put your comments down below, but thanks again.